All right, everyone. We're gonna look at Bull stock today. This is Webull. I don't know much about it. I think this is a broker. I use Fidelity, so I'm not sure, and I use Moo a little bit for researching, but Bull I'm not super familiar with. But I saw it was trending today, so we are gonna look and see why. Stock Twits is telling me it's because of the elimination of pattern day trading rules. Which is interesting because there used to be a restriction that if you have less than 25K in your account, you could only day trade like 3 times within a 7-day running period. And that is no longer the case anymore. So that is interesting. So that's why it's trending. We'll do 3 things here. We're going to look at their latest earnings. We're going to look at their current valuation, and then we're going to look at a few other things to consider. So the latest earnings right here, this is as of the end of the year. You can see they have a massive amount of cash they're sitting on. I'm sure that's because of something about it's like a broker, which was just check real quick. Yeah, digital investment platform. So yep, it's a massive amount of cash. This is probably requirements for the broker they got to do. They got a bunch of receivables from customers, just massive amounts of current assets. Then this is not in thousands, so this is all the real actual number. So 650 million in cash. All right. And then you got payables due to customers, which this is in the billions, but again, that's just gonna be related to the business. It's not really anything to be alarmed about. And then I'm not seeing anything else that's standing out to me in the balance sheet. So, all right, revenues. Wow, look at that. That's a pretty big revenue increase year over year. Interest related income went up. Handling charge income went up. Other revenues, yeah, that's pretty solid revenue growth in 1 year. Not bad. Then all their operating expenses looks like they also went up a good amount though. Except for this. What's this? Marketing and branding. Hey, I always love to see that. Whenever you see the marketing spend stay about the same, but then the revenue goes up. That's pretty efficient marketing. So, that's always nice to see that. But besides that, everything else kind of grew along with the revenue, and um, you're seeing a slightly improved operating margin because you can now see that they're making money as opposed to last year they were not after all the operating expenses. So that's nice. And then there's a whole bunch of below the line items. Look at this. A lot of shares issued to preferred stockholders. Dang. Yeah, it looks like if it weren't the operations is doing better, but then you get to all these below the line items and you're looking at preferred shares, preferred shareholders, share warrants, all this stuff that's just killing them at the end here. Um, Gosh, what is that? Is that a normal thing? Tell me more about all the preferred, um, what were they calling it? Preferred shares redemption and then ordinary shares issued to preferred shareholders. Shareholders of Bull stock. Okay. All right. ChatGPT, you're gonna make me take a screenshot, aren't you? I probably didn't give it the best prompt. What are all these expenses below? Yeah, okay. Counting adjustments, pre-IPO. Okay, so just non-cash reclassifications from the SPAC conversion structure. Counting buildup. Dilution mechanics. It's not cash burn. Will these dilution mechanics always be around? Because that's what I wanted. Because this is weird. Counting noise, capital structure. Once all preferred shares are fully converted and settled, these lines should go zero. Okay, let's get to the real question. Have the outstanding shares of Bull stock greatly increased? Yeah, that's what we're getting at, because all these, it went from 600 million outstanding shares, and that's a 15 to 20x increase in effective share base. Holy cow, that's a lot. It went from 30 million outstanding shares to 600 million outstanding shares. And the reason why that's so bad is because that means, and maybe you guys all know, but just we'll say it anyways, that means that all of their earnings and money is getting split up into smaller pieces. So you went from having 40 million slices of pie to 600 million slices of pie. Well, the same pie. That sounds like that'd be a great thing if you had that many more slices of pie, but it's more like one pie is being split up 60 million times instead of 30 million times. And that's not good. It makes it much harder to move the stock. So that's an interesting find there. But if it weren't for all this dilution, I mean, the company is making money. If it weren't for all these kind of adjustments and whatnot that they're doing from their SPAC. So, yeah, dang, that's tough. But well, this is what we can do, because this is not cash burn. Let's go to the cash burn. I want the statement of cash flows. Man, being an accountant for this company would be fun. Let me see. Statement of cash flows. You got that in here somewhere, surely, right? If not, it's not a big deal, but what you're looking at is you're looking at a company that is actually kind of profitable if it weren't for all this kind of share dilution and whatnot. So, let's go look at the valuation now of this. You're looking at a market cap of 3.5 billion and 530 million shares outstanding. That's not a small market cap. That's pretty high. And then the shares outstanding is also pretty high. Okay. Revenue growth, yep. Massive revenue growth. Cost of goods sold doesn't increase nearly as much as the revenue does, so that's good. Gross profit is mooning. The operating expenses are eating up most of that, though. And then you got their net profit, which is pretty good. Yeah, net profit percent is 4.5%. Whew, interesting. Okay. What else do I want to see here? I want to see what is the short interest of. Okay, 7 to 10% are insiders buying or selling. Okay. Ooh, okay, so then my takeaway on Webull is that it does have massive revenue growth. It is profitable now before the below the line items. And then you're also looking at a lot of dilution from the SPAC. And it looks like that's kind of a one-time thing. So maybe the worst is over on Webull, and maybe it's getting better. But even from there, I guess my thing that's kind of tricky is that do you really need to have $3.5 billion market cap to make, what was it? 24 million? I guess there is sales growth. So there's that. There's a lot of sales growth, and maybe that's why you're buying this, is the price to sales ratio. Maybe that's why you're getting it. Look at the stock price. Below the 50-week moving average. And then after today, it hit the 20-week moving average. So, interesting. Take with that what you will. Again, this is my first look. Let me know what I'm missing. Are there any big upcoming catalysts? We did briefly talk about the trading rule for being able to day trade if you have an account less than 25,000. So that's interesting. So yeah, let me know what I'm missing. Maybe the dilution, it sounds like the dilution from all the SPAC stuff is over and the preferred shareholders are getting converted. So maybe that's over. Maybe this is a good entry. So yeah, let me know what I'm missing or not thinking about. But interesting stock, interesting look. So, all right, guys, I'll see you in the next one.